proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to grow your wealth. I'm your host, Brett Swarts, and each episode I am joined by some of the best real estate, financial, and wealth minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He has become a friend, and now he's a strategic partner of Capital Gains Tax Solutions. And what I love about Kevin is he is a real estate investment principal for over 20 years, and he's the host of 2 top 10 real estate investing podcasts. I actually first learned about Kevin by listening to his podcast. It's called Real Estate Investing for Cash Flow Podcast. And I got a chance to reach out to him about a year and a half ago and really start to see some of the deals that he has sent and the deals that he is doing, as well as meet his team, him and one of his right-hand man, his name Brian, in Florida. And I'm excited to kind of announce a new strategic alliance that we're launching for exclusively for capital gains tax deferral clients of mine to be able to invest passively into mobile home parks. And so please welcome to the show with me, Kevin Bupp. Hey, Kevin, how you doing?
Brett, I'm doing awesome, man. Always excited to be with you, man, and spend some time with you.
Absolutely. You know, we share the love for real estate. We share the love for, mobile home parks. Multifamily was my specialty growing up, but cash flow, being able to depreciate assets, being able to live passively, should you want to with your wealth. I believe is the best way to grow your wealth is through really 3 asset types: mobile home parks, senior housing, assisted living, and then multifamily. Except right now, multifamily is so high. I'm just very, very hesitant to invest in a lot of multifamily, especially in California. So it really leans on those other 2 asset types. But in today's episode, we're going to dive into mobile home park investing. But for our listeners who are just getting to know you for the first time, Kevin, would you give them a little bit more about your background and your story?
Sure, absolutely. Thanks again, Brett, for having me. Yeah, so as Brett had mentioned, I've been investing for many, many years now. I got introduced to real estate back when I was 19 years old. I'm 41 now, and met an individual local to me growing up in Pennsylvania that happened to be a local real estate investor. He was about 25 years older than I. His name was David. David's still a good friend today. And David was just a very successsul but small local type investor that owned small multifamily rentals and single family rentals. And, that at that point in my life, Brett, I was going to school, attending bar part-time, and I knew there was something bigger. I'd always kind of hustled when I was younger. I always, did side gigs. I, had a paper route for many years. I would mow lawns. I would shovel snow. I would install car stereos in my brother's friends' cars. So back when that was cool to have loud stereo systems, all that kind of crazy stuff. I did whatever I could to make money because I grew up never going without. I mean, we always had everything we needed. We lived in a nice home, very modest, but nice home and nice neighborhood. Went on one family vacation a year. Both my parents worked. And, but, we didn't have a lot of extra money. We didn't have a lot of I'm not gonna say we didn't have toys, but we didn't have the gadgets. The kids that are, when you're 12 years old, you want the newest bike, the coolest bike, or a dirt bike or things like that. We didn't have a lot of those things. And so I learned at an early age that if I wanted them, there was a way to make my own money, so I could go buy them myself. And so I was always trying to work and make money and to be able to buy the things that I really wanted. And so fast forward, going to school, 19, not really sure what the future had in store for me. I knew I wanted to own a business. I knew I wanted to do more than just go get a job like my parents had and make, mediocre income and stay at that job for 40 years. That just wasn't exciting to me at all. And again, met David. I was very blessed to meet David. And David and I became really good friends. And he invited me to a boot camp down in Philadelphia. I knew nothing about real estate other than just the little bit that he had told me. And I decided to attend because number one, he had paid $3,000. Number two, David seemed to live a pretty cool life, very different than what I was used to seeing. And so long story short, went to that boot camp with David, started buying single family properties shortly thereafter, and continued to grow my portfolio, really focusing on buy and hold assets, buying real estate for cash flow. Like that was the one thing that David always taught me. You don't want to buy and sell. If you're buying and selling, you're creating a job for yourself. You want to buy assets that you could put some debt on, you can leverage, and then have leftover cash flow at the end of each and every month. So that number one, you got tenants that are paying down your principal balance on your note. Number two, you got additional cash put in your pocket. That home's going to be there for the next 10 years, 20 years, 30 years, 40 years, what have you. At some point, it'll be paid off and you'll have even more cash flow coming in. That's what he built his business around. And I did learn very quickly, Brett, that it didn't really work when you didn't have a lot of money or a lot of capital to buy assets with. And so I quickly modified my approach for the first couple of years, where I would essentially, buy 3 properties. I would wholesale 2 of them, and then I would keep one. And then I just rinse and repeat. And I rinsed and repeated that for a couple of years before. Number one, I had much more capital myself to deploy. Number two, met, a litany of good private investors and folks that had capital that could help us support our growth. And so fast forward, ended up acquiring over 120 single family properties in my 20s, built a fairly substantial single family home portfolio, and then realized that was fairly inefficient. It took a lot of time to buy those single family properties, and that apartments probably was a more efficient way to go. Dove into the apartment space, owned hundreds of apartment doors, hundreds of single family properties, and then fast forward through 2008. 2008 was some turbulent times, some challenging times, and started a few other businesses outside of real estate during the crash. We had a lot of challenges down here in Florida with the prices, basically, losing 50% value almost overnight. Same thing you guys witnessed in California. Even the rental rates came down. I know everyone says that rental rates continue on an upward trend always. Well, that wasn't the case back then. There was definitely concessions in a period where things got thwarted a little bit. In any event, I got introduced to mobile home parks in 2012, and it was an asset class that I had never considered. I was really keen on apartments. Apartments seemed to be the best way to really scale and grow a large portfolio efficiently, much more efficiently than that of single family. And I had lunch with a guy by the name of Randy. Randy owned mobile home parks here locally here in Florida. And it's interesting because at that point I was kind of in a rebuilding phase of my business, Brett, and I didn't know Randy. We just happened to have a mutual friend that connected us, and I didn't even have an interest in mobile home parks. In my mind, they were just the stereotypical, drug, sex, and rock and roll. It wasn't something that I really had an interest in whatsoever. However, Randy quickly knocked down that idea, that stereotypical image that they're all drug, sex, and rock and roll. He showed me pictures of the parks that he owned that had very nice homes in them. They had normal people living in them that paid their bills on time, and to him were the best investment to date. Literally, like under the radar, not many folks knew about them, and by far the best investment he ever made during his 70 years of being an investor. And I left that meeting, I left that 2-hour lunch meeting, Brett, after Randy intrigued me in many different ways of why mobile home parks trump apartment complexes. And I left that meeting and I committed myself to buying a mobile home park in the next 12 months. Literally saying, hey, I'm going to go buy one. I'm either going to prove or disprove all these great things that Randy had to say. And ultimately we did that. I bought that first mobile home park in Atlanta, Georgia, a very distressed mobile home park, a phenomenal market, but very distressed, and still own that asset today. And realized that what Randy told me was very true, and that this was an opportunity to not just grow a portfolio in an asset class that didn't have as much competition as multifamily, but there was a lot of other benefits that came along with it. A lower turnover rate, higher returns on investment, right? Much higher returns on investment than that of multifamily, and that there was a massive barrier to entry because they weren't being built anymore. I mean, it's just all these things that he threw my way. It was intriguing enough to go buy one. And now here we are almost 10 years later. We own assets in now 11 different states, and are continuing to grow. And we love everything about mobile home parks.
Absolutely. I love everything about that story, especially, having that guide, that mentor, David, ahead of you, right, to help pave the way, share some of the experience, inspire you. But then more than that, you took action, right? You took action and you've executed, and now you own over 20 different parks, right, in different multiple states. And I love how hands-on you are, Kevin. I've followed you for a while now, and what I really appreciate is you have your podcast, but you are as hands-on and connected with your real estate and with your team, where literally it's cool because you do your Facebook Lives or your videos where you're going into these asset types in these different states, and you're flying out of Florida, right? and it's, I don't know, in the middle of summer, and you could, imagine with what you've been able to build wealth, you could be sitting in, Clearwater, Florida, or sitting on the, the beach there, but you're out there because you love adding value. You love looking for deals. You love solving problems and helping passive investors invest alongside of you, which is what we're going to talk about here on the show. So let's dive right into that. When did you become obsessed with helping others achieve financial freedom when it came to investing passively in real estate?
Yeah, no, that's a great question. I think the first introduction I had to really seeing the benefits of kind of giving information and then watching the impact that it had on a large population of folks was with my podcast. I launched my podcast back in 2014. And I really did it because a couple of different reasons. But number one, I enjoyed sharing information. I really enjoyed, the little bit of knowledge I've gained over the years. I enjoy sharing it with others. I know that there's plenty of people out there that are in the journey that I was, 10 years prior, right? Like they're just getting their start. They're trying to figure out their way, trying to figure out that path. And so that podcast was the really first period of time where me putting out information to the world and then actually receiving back compliments. And, you've helped me, accumulate wealth for my family or help me buy my first investment product, what have you. That was incredibly rewarding. But outside of that podcast, we bought the first couple of mobile home parks, and it was mostly with our own money. However, we tried to document what we were doing and, shared that information with others. And we had folks that would reach out ultimately, seeking to align themselves with us and kind of follow us for that journey. And that was very intriguing to me. Now, in the past, I've had private lenders, but in a very different capacity, private lenders in a sense of a debt structure, right? So them acting as a bank, which is very different than that of equity partnership, which is what we do today. And it was a very it was a point in time where I got to reflect and really look at what I was doing. I was buying these parks. I was putting out the podcast, putting out information, and this seemed to be a way that I could expand helping folks. Right, literally, I'm on this this journey to building wealth for my family and I. Right, this legacy wealth for my family and I. That's the same journey that most of these folks were that were reaching out to me. Like they weren't billionaires. They were folks that had worked really hard for, the money that they had. Maybe they had a net worth of $1 million or $2 million, right? They've been hustling their lives as well. Now they're looking to expand upon that and actually help grow that money and do it by aligning themselves with us. And I just thought I saw it as a win-win. It was a huge win-win. Number one, it allowed us to help grow our business exponentially. And number two, it helped them build wealth for the family. I mean, it doesn't get better than that. So anyway, just reflecting back, it was right around that time when I started the show where I also realized that we could help hundreds and thousands of folks out there build legacy wealth for their family by allowing them to join us on our path to mobile home park investing.
Absolutely. Absolutely love that. So what would you say is the biggest, biggest thing you'd want to communicate to potentially new investors who might be, interested and investing with you in Sunrise, and also maybe even just new to mobile home parks?
Yeah, I think it's really important to get educated, and it's whether it's mobile home parks or any other type of investment. And Brett, the world of free information, it actually it's kind of overwhelming now how much is out there. You got podcasts like yours and like mine and the millions of others. Now, I don't know how many podcasts are out there now, but I reflect back when I was just getting started, this boot camp I went to at David, and they handed everyone at the boot camp this 3-ring binder that had 300 pages in it, and then it had like 18 CDs in these sleeves, right? And it was that was the information back then. You had to pay a lot for it. You could stay up in the middle of the night and find the infomercials and get it that way, or maybe go to the library and find a random book here or there. But now there's a ton of information. You don't have to dig too far to find it, and so I think that anyone that's looking to get started in mobile home park investing or any other type of investing, they need to really spend time and energy, peeling back the layers of all the free information that's out there. And there's a lot of it, and you're going to have to dissect a little bit and separate the good from the bad. But I think first and foremost, I would spend a good bit of time there to determine, number one, if the asset that I think I want to invest in is the right one, is mobile home parks the right vehicle? And then number two, who are the guys that are out there that are actually doing it, right? Like who are actually not just talking about it, like who is actively involved in this business and has been doing it for quite some time and has a track record, what have you, right? Make sure that you're investing your money with the right group and not just someone that maybe is doing their first deal, what have you. So again, get educated. First and foremost, get educated.
Beautiful. Yeah, exactly right. Right. And that's part of why I'm excited about our new strategic alliance that kind of officially launching and announcing right now. And I know I've been trying to send you, Kevin, deals or funds of clients for a little while now. And I'm excited about the new fund that you guys just launched just in the last, I think, 30 or 60 days. Would you tell us a little bit about that and what the focus is there, and what and also add on the parking lot, which is investing, which is super interesting and kind of super niche?
Sure, absolutely. Yeah. So SEI Growth and Income Fund 3, we just launched it now about 2 months ago. And so it's our third mobile home park fund. Now, it is slightly different, as Brett had mentioned. Historically, our last two funds have been 100% mobile home parks. However, there is another asset class, parking lots, mostly surface parking lots like you might find in a downtown central business district or a highly trafficked tourist location. Those will also be put into the mix alongside mobile home parks. However, I will say, proportionally speaking, it's probably going to be an 80-20 type of mix between mobile home parks 80%, parking lots 20%. And so as far as the fund itself, it's a $25 million fund. More than likely, we'll be raising capital here over the next 12 to 18 months in this fund, and also buying assets as well. We just closed, as of this interview today. We closed on 2 assets so far in the fund. We'll have a third closing here by year end. The very first asset was a parking lot. It was one that we've been kind of kicking the can for the last 6 months, seeing what COVID was going to do to this particular area. It's a phenomenal lot. It's a small one. It's 27 lots or 27 spaces in downtown Wilmington, North Carolina, signalized intersection, right on Restaurant Row, right in the historic district. And ultimately, we were able to buy that from I call him a mom and pop owner. He was a doctor, owned some other real estate in the area, but he kind of ran it like a mom and pop. And we're able to purchase that for $695,000. And then before even getting out of due diligence phase, get a signed 5-year lease in place at $72,000 with a regional operator that manages a lot of lots in that downtown historical district. And so you guys can do the quick math. It's pretty close to a 10% unlevered return on that investment. So excited about those types of opportunities in parking lots, the mom and pops that aren't really maximizing the value. Very similar to the mobile home park space. Lots of the sellers that we purchase from are mom and pops. Maybe they're first generation, potentially second generation, but they've been running the property for 20, 30, 40 years. Haven't necessarily treated it as much of a business maybe as a professional operator like ourselves. They haven't been able to maximize the value by keeping up with market rents. They haven't been able to inject the capital that's needed to bring new home inventory in or make the necessary capital improvements that will be able to justify raising rents to market rates. Things such as collections typically aren't as good with the mom and pop operators, right? They're giving breaks to their friends that live in the community. They're not collecting 100% of rents on a monthly basis. So we've been able to find phenomenal opportunities both in the mobile home park space and the parking lot space by going direct to owner and buying these not distressed, but not fully maximized type of investments. And so as far as the fund, as I'd mentioned, it's probably about 80% mobile home parks, 20% parking, $25 million fund. It's a $100,000 minimum investment. Only for accredited investors. And so you do have to be an accredited investor to invest alongside us. We've put together a couple webinars, offering docs, what have you. They can all be accessed if you go to investwithsunrise.com, Brett. So that's like a one-stop shop landing page that has all the information about that fund. I'd be more than happy to share some other particulars of the fund itself, but feel free to where you'd like to go with this.
No, that's great, Kevin. And the PowerPoint is really good in the webinar. That Kevin and his team, and in particular Brian as well, his right-hand man there at Sunrise, put together, and it's very detailed and very organized, and you can look at that and go through that. The what's the biggest challenge right now, Kevin, facing just mobile home park syndicators or operators? Yeah. What do you given what 2020 brought and potentially for 2021, what do you think the biggest challenge might be for you and your team?
Yeah, no, that's a great question. As far as when you reference it as what 2020 brought, I mean, I do think that collections will, continue to maintain really strong in the mobile home park sector, much more than that of multifamily, and especially much more than that of hospitality, retail, what have you. As far as performance wide, um, who knows what 2021 is going to bring the first quarter with regards to the CDC moratorium. But I will say that mobile home parks, I think that they will continue to perform better than any other asset class, because there's a couple key reasons, Brett. Number one, you could pick any mobile home park that we own in any city across the United States, and I can promise you that it's the cheapest housing option available in any given city where we own or anyone else owns. You can't have a family of 4 live in a 3-bedroom, 2-bath place, even in the worst of worst apartments, for the price that they will pay to live in that mobile home park. Our average lot rents across the country are just under $400. There's nowhere that a family of 4 can live for $400 a month. And that doesn't mean that it's subpar living. We're talking nicer homes, fit and finishes of that of a stick built home, very nice homes. And so in any event, I think that we will continue through COVID, through any other crisis. I think mobile home parks will continue to outperform that of other asset classes. Now, as far as some of the other big challenges I think that syndicators are facing, and this is more has to do with the secret getting out of the bag, I think is the best way to put it, with mobile home parks. There's a limited supply, and so it's very constrained. You've got a lot of demand chasing after an asset class that has limited supply. There's no new parks being built, or very few in any given year. In fact, it's the only asset class that has a diminishing supply. So more parks get redeveloped and turned into something else every year than that get built. And so now, in addition to that, you've got a lot of folks, because folks like Brett and I talk about it, the word gets out that mobile home parks are so great. You got a lot of other investors looking to get into the space, not just smaller investors or medium-sized syndicators, but also even large private equity firms have realized that mobile home parks are an incredibly attractive investment vehicle that they never considered in the past. Carlyle Group, Apollo Group, Blackstone, they're pouring billions of dollars into this space. And so with that being said, I think some of the other challenges we'll face is, being able to find product. But with that being said, one of the things that we do really special at Sunrise, Brett, is that we have we have an off-market initiative, and this isn't something new. We've been doing this for years. This is really one of the reasons why we decided to do our very first fund years back, is that we're really good with deal flow. We're really good with off-market deal flow. Now, off-market is, kind of the key phrase there. Not using, we like brokers. I love brokers. We buy through brokers, but we found that going direct to owner allows us to get the best deal possible, because we can get in front of that owner, maybe not in the day that they've decided to sell, but we can stay in front of that owner. So when the timing becomes right for them to consider selling their park, they think of us first, and it doesn't go out to the mass marketplace. That's allowed us to buy deals under their market value time and time again. We've bought 80% of the parks that we own today, direct to owner, off market. And that's how we've been able to continue finding the best value. In fact, the parking lot I just shared with you as well, that was a direct owner lead. That was a direct mail. No one's doing direct mail in parking lot space. The mobile home park we just closed a few weeks ago, that was a direct cold call. We happened to catch that guy on the literally like 2 days after, where he made the decision that he was going to sell. He was going to list it with a broker. And so it's allowed us to buy incredible opportunities, whereas others are kind of just waiting for listings to come out and fighting for that same listing, driving up the pricing, driving down the cap rate. We're able to buy value time and time again by going off market. So that's a challenge. I think supply is going to be a challenge, but I think that our off market initiative will allow us to continue bringing, great deals in, month after month.
Yeah, absolutely. Well, really well said. And I call it swimming in the blue ocean versus the red ocean, right? The blue ocean being where it's calm, right? There's not, you can kind of see clear in the water, right? What's there, versus the red ocean, where it's like a lot of the sharks, right? A lot of the brokers, a lot of the 1031 money, a lot of the big, equity groups that are chasing deals. And so if you can go direct to owner, establish a relationship, find a fair price or fair deal terms with someone who's been able to deliver like you have on your deals, it can be a win-win for everybody. And that is what I love about working with Kevin. So, Kevin, let's see. Are you ready for the lightning round, and or anything else you want to touch on what we just said?
Yeah, I'm ready for lightning round. Let's do it.
Cool. All right. let's see, biggest challenge in real estate or mobile home park investing that you and your team overcame?
We tested the waters with handing off our property management about a year and a half ago. Well, now it's closer to 2 years ago, and to a third party operator, very large operator that has been in the business for decades, and realized about 4 or 5 months in that it had been a mistake. However, we had doubled in size. We had acquired literally 9 communities shortly thereafter, taking them on. And so being able to build the infrastructure to bring everything back in the house. And so basically at the end of last year, starting in October, we brought in 19 communities all at one time. And so it was quite a heavy lift. A number of those communities had not been performing at their peak level, given the less than stellar operations with the property management company. And so I'm very proud of the team that in a matter of 5 months, we were able to stabilize the majority of those communities and get them operating efficiently again. So, and that was over holidays, that was with delays and what have you. And we kicked ass. So
Beautiful.
Very proud of that.
Love that. Love that. Let's see. Knowing what you know now, if you go back to your 25-year-old self, Kevin, I learned this question from you. What's the one golden nugget that you would make sure you would do?
Man, buy mobile home parks, as many as possible, as fast as possible. No, all joking aside, there was always this trepidation I had, buying single family properties, buying some small duplexes. I remember buying that very first apartment complex. It was an 18-unit apartment complex, and it was scary. It was like the unknown. And what I realized is that once I dove into it, it was no different than buying 18 homes, getting the same type of financing. I mean, there wasn't many differences there. It was just a larger scale at one given time. And so I would say, get over that fear faster, buy some larger properties, buy efficiency. And that's what you're buying when you're buying these larger assets. You're buying efficiency. Buying one at a time, one single family home at a time, is incredibly inefficient. And we all have the same amount of hours in the day. We've only got limited bandwidth. And, I think as when you're younger getting started, I mean, you've got the time and energy. You're not married. You might not have kids, more than likely. You'll spend that time and energy more efficiently. And the same things when you're older, right? With Brett and I, we've got families. We want to spend time with our families. We don't want to spend time being inefficient. Buy larger, more efficient properties.
Beautiful. Well said. What's the one book you've recommended or gifted the most in the past year?
Yeah, that's a great question. This is probably the same book I've gifted probably the largest amount of time over the last 2 or 3 years is the Go-Giver. So absolutely phenomenal read, short read, and one that everyone on our team has and everyone my family member has, and their neighbors and friends have it as well. So I give it out everywhere.
I second that. I just reread it again just this last 30 days. Amazing book. Give me a mobile or digital resource you recommend for your business.
Yeah, that's a great one too. I think Slack has probably been one of the number one game changers of efficiency in our operations, communications with the team. We started using Slack about 2 years, about two and a half years ago. I can't imagine a world without it now.
Likewise,
Phenomenal.
I use the same thing too, and it's incredible. Favorite leadership quote?
Whew, that's a good one. I'm going to butcher this because I used to have this little metal plaque on my desk, and I don't know where one of my kids took it, but I'm butchering this right now. I can't remember it.
Maybe it's a theme. Maybe it's like a theme, right? Like an idea that you strive to live by.
Yeah, it was a persistence quote by anyway.
Was it Winston Churchill?
Yes, that one, and I can't even think of it. You've got it on your wall. I literally have a plaque
right?
with it.
I actually have it on my wall, Kevin.
Yeah.
It's not the critic, right? Who counts, and it's quite a bit.
Yeah. You caught me off guard on that one.
All right, next question. What are you curious about right now?
What 2021 is going to bring? Really, I just curious about what the world looks like here in the next year, and lots of folks have been affected very positively, but also other folks have been affected very negatively here in 2020 with the virus and the pandemic, what have you. And so just really hoping that 2021 allows us, the country, the world to get back on some type of semblance of normalcy and back to a more positive state. Just lots of controversy here over the last year. So very interested to see what 2021 brings.
Thank you for sharing. Last question, Kevin. How do you stay centered on your values and stay encouraged to charge forward to reach your goals, given your success with the podcast, with real estate investing, with your family, with business, with everything that is in your life? How do you stay centered in your values, and how do you stay encouraged to reach new goals?
Yeah, that's a really great question. So, I steadily listen to podcasts like yours, Brett. I mean, literally just trying to take as much free time as I have to listen to new information, listen to others' perspectives on things. Um, and just the 2020 has been an interesting challenge because it's separated teams. Like our team, we're not in an office anymore, things like that. And really honing even tighter in on, really scheduling out my day, but not just the day for the day, but the day before, that evening, really planning out the following day, the following week, what have you, the big, 5 things I want to accomplish for that one given week. And I'm old school. I like writing things down. Like it doesn't, the calendar works for me. I follow my Google Calendar on a daily basis, but unless I write it down, it doesn't fully get trapped in my brain. And so I've got old school tablet of paper here where I write notes on a regular basis. And even just taking time with the wife. My wife and I, we always go to lunch at least one day a week, and I'll put on my calendar, make sure that we don't miss that day. We're not missing the time to spend together. We're not missing time with the kids, what have you. And that allows me to stay structured.
Beautiful. Well, Kevin, I want to thank you for sharing so much with us, and I want to thank you for becoming a strategic alliance of capital gains tax solutions, and already working on some deferred sales trust deals in the mix right now. Working on a big one in Minnesota. We'll see how that one shakes out. And in the meantime, I want to invite all of my current clients and potential future clients to check out Kevin, listen to his podcast, go to Sunrise Capital Investments and learn more about that. We'll drop the website here in a minute, but really dig into mobile home park investing, right? And look at the asset class itself, and look what Kevin said about educating yourself on the advantages that it has, because it really flew under my radar too for a long time, right? And being in commercial real estate for 14 years, and being an investment real estate broker, focusing on multifamily for years, and investing for years, it's kind of always been under the radar. Maybe it's part because I'm in California and they're so hard to find here that make sense for the deals. But the good news is there are opportunities, and they're value add, and they're cash flowing, and they're out of the state, out of the West Coast, and other areas that Kevin is unlocking and finding. And we want to connect you with that, because it's one thing just to use the Deferred Sales Trust and defer your capital gains taxes. But the next most important question is how and where the fund's going to be invested. And you want to know that you can diversify and go in with strategic alliances that have proven track records and operators just like Kevin and his team, especially in an asset type, which I think, again, with the top 3 being senior housing, mobile home park, and multifamily, but really multifamily and third place at that point because prices are so high, mobile home parks being just right there at the top. So with that being said, you can go to capitalgainstaxsolutions.com, or if you're already a client of ours now, you can just shoot me an email or shoot it to Kevin, and we can all connect and discuss opportunities to invest with him and his fund. With that, Kevin, would you remind the listeners where they can find you if they want to reach out to you?
Yeah. So investwithsunrise.com if you want to learn more about our company or investing with Sunrise. And then if you would like to find me and see what I got going on, you can go to kevinbupp.com.
Beautiful. And if you want to check out us, go to capitalgainstaxsolutions.com. And if you're a professional listening to this, you can go to experttaxsecrets.com to learn how the Deferred Sales Trust can help you grow your business and help your high net worth clients. Thanks so much, everyone, for listening. We wish you well.